Samir Shetty is joining in as well. Gentlemen, good morning. Great having all of you with us here on the show. Prashasta, let me start out with you. Incredible last 4 or 5 days. No other way to describe it. Mid-caps have lost 50-60 odd percent. Although on an index level, the market has lost just about 5.5%. Fear and panic.
Well, gentlemen, Hitesh, wanted the big picture from you first. Is 5690 closer than we imagine?
It's a bit of a mixed picture right now because if you speak about the Nifty, the short-term trend, strictly speaking, is down now, and we have a very strong resistance at the 5950 to 6000 level, which was earlier a very strong support in the months of September and October. 5727 was the low that we reached on 26th November, and if this is taken out further, which seems very likely, then that is bearish for the short term. But a move above 5950 on the upside would change the short-term trend in the Nifty to upwards. FIs are selling currently, which is something that is quite serious, and that this is not a number that we need to keep track of on a daily basis, because if they continue to sell, that could spell further weakness for the market. The VIX, if you take a look at the VIX, currently it's at 22, which is up from a level of 14 in September. So although it has gone up, the fear factor in the market has gone up, but it's nowhere near the levels of 35, 36, which we had seen in May 2010. So although the fear factor in the street has gone up, but it's still not reached a level of panic, which could change very sharply in the next few days. So the next few days are very important. My sense is that the 5400 to 5500 would prove to be a very strong support, because that is the region where it consolidated before this huge up move started, and that's where currently the 200-day moving average is also. So that's a number that could prove to be a very strong support. The dollar index is weakening, and that could result in global equities and commodities rallying, which is pretty much what has been happening in the last few weeks. So overall, the global picture is very, very strong. All Western indices and even Asia indices are very, very strong and very clear, well-established bull markets right now. So that's what's creating a bit of a confusion right now, because globally we have a very strong picture, and locally things are looking weak in the short term. So let us hope that the global strength helps us see a reversal in the Nifty in the next couple of weeks to come.
Okay, so you're looking for the silver lining there, but think about banks, because that's been really the focal point these last few trading sessions. What are you doing with a large cap banking first?
Manvi, based on our model, we have got exits, long-term signal exits from all the banks in the last couple of weeks. So if you're talking about a long-only portfolio where you are looking at banks, we've exited all of them in the last few weeks. Now to re-enter them, we would need to see some sign of strength. So we do not buy on weakness, but we buy on strength. We would need to see a constant uptick from here, 5 to 10 days of strength before we reinitiate fresh longs in any of the banks. So banking is one sector that we have clearly exited currently, and we cannot take a call on re-entering until the market shows us further signs of strength in that area.
Right. Prashasta, outside of the PSU banking space that we already spoke about, where would you look? Overall sort of view, if you look at prices, if you look at charts right now, and stocks have come off a fair bit, would you a stock has come down 30-40%, would you want to look at that stock as a buying opportunity, or would you rather buy into strength, which actually only leaves you with, or rather relative strength, which only probably leaves you with a pharmaceutical space, or IT as a space? That's about it. Would you want to do that?
Yes, absolutely, Prashant. Currently, IT and pharma are showing the most strength in this market. So if I were to be a buyer in the IT space, I would be looking at TCS, Info, and HCL Tech. And in the pharma space, I would be looking at Dr. Reddy's and Sun Pharma. But most of the other sectors are currently bearish, and we know what happens in a bear market. Things could fall very, very sharply. So I would wait for some amount of consolidation and strength before actually going long in any counters currently. And what seems to be happening shows it's smelling of a distribution phase. A lot of classic signs of a distribution phase happening now. You find a lot of ups and downs, violent gyrations. So you could see Nifty going up 150, 200 points from here, but then again a steep fall after that. FIs are selling, so it's quite possible that we may be at the end of this bull run which started from March 2009. That is why we are extremely cautious at this level. Rather be out of the market, or maybe short if we are aggressive, rather than being long currently right now.
Okay. All right. Precious, the backs.
As always, pleasure to have your perspective here on profit. Hope that today's trading session passes smoothly and you have a great weekend. Thanks very much for joining us. When we return, it'll be